Hey, everybody.
Morning.
Good morning. I know it's been a while since I've done one of these, like a really long time. But we thought it was important to kind of kick off this new year and actually do better about making sure that we're getting information out that is helpful. And, you know, we've had a really strong market over the last couple of years, and that's the understatement of the century. But, you know, we have some things that are going to be changing moving forward that we just want to address and kind of stay abreast of. And so I thought I would bring Erin Merriman with Thrive Mortgage on. She is my go-to lender. These days, whenever you're placing offers and you're competing against multiple offers, it's incredibly important to have a strong local lender that you're working with, because it means the world to be able to tell that listing agent that you're working with someone that you know is going to close a deal without any problems at all. And so she is my person for that. So thank you.
Thank you.
Thanks for coming on. Mm-hmm. So the thing that we really wanted to talk about today are the rising interest rates.
Yes.
Yeah. So I'm sure all of you have heard that, you know, there's going to be some changes happening over the next couple of years. And, you know, we just wanted to talk about what that's going to look like and how that affects purchasing.
Yeah.
So,
I mean, we've been in some really lowest interest rate market ever, I think, historically, over the past few years. Yeah. And they've been slowly but surely going up until just this last 6 weeks. But more so in the last 2 weeks, it's been pretty intense. Rates are going up rapidly. You know, we can quote one thing in the morning and by the end of the day, it's already up an eighth to a quarter. It's a really unsure market right now. So I don't think these rate hikes we're experiencing right now are permanent, but they eventually will be. The Feds intend to raise the rates 3 times this year. And this first rate hike that we've had isn't even issued by the Feds. So
no, that's just it's volatility in the market. But that is something that we experience from time to time. Yes. I mean, anytime you've got elections, I mean, there are a lot of political things that kind of drive the financial markets. And, you know, so we see a lot of that uncertainty sometimes and volatility. And so, you know, it doesn't last forever. This sort of thing is just kind of like you're riding a roller coaster. Right. And the hope is that it levels out, and typically it does. So that is not, you know, the hikes that we're talking about that are coming, they're completely separate from what she's seen over the last, you know, week or so. But but they've made it very clear that their intent is to raise rates. So how many times are they planning to raise it? They've kind of
three times in 2022, twice in 2023, and one more time in 2024 is the projections. That's the projections right now.
Did they get projected amounts that it's going to go up each time? No. Okay.
No. I think their intent is to, you know, just completely get out of it, you know, where the Feds aren't buying mortgage-backed securities any longer.
Okay.
Yeah, because that's really kind of been what's suppressing our rates. You know, but it's still good rates. Yeah. Overall, historically.
Right. So that's an important message, I think, because look, here's the thing: people are still going to need to move.
Right.
People are going to get transferred. They're going to need to move to a different type of home that, you know, that's better for their family.
Or downsize.
Yeah, or downsize because of whatever's going on in their life. There's always going to be reasons to move. So what I don't want to paint is some doom and gloom picture where, you know, it's going to be, you know, terrible for you to make those moves if you need to, because at the end of the day, from a, you know, big picture standpoint, you know, going up to even in like initially it'll probably go like what into the fours. Mm-hmm. So that is still a fantastic rate.
Right.
Whenever you're talking about rates over the last, you know, 20, 30 years, they've kind of been 40 years. They've kind of been all over the place. They used to be really high. So we put together, Erin put together
a couple of things,
a few numbers, you know, just to kind of give you an example of what
a $300,000 mortgage would look like. So in 1995, rates were around 9%. This is just principal and interest. So please remember what I'm telling you today. You would still have taxes and insurance on your mortgage payment, but a $300,000 house at 9% would have cost you around $2,400 a month. a $300,000 house today at 4% would be $1,400 a month.
It's $1,000.
So that's $1,000
a month
difference in buying power. Of course, we're not going to go to 9, thank goodness, no time soon. But just want to put in perspective that a 4% rate is still a very, very good mortgage interest rate. Very good. Really, anything below 6 is a good market. It's a healthy economy. Once you get more into the 5s, that everything is a little more healthy.
That's true.
You know,
if it's not being forced,
right?
Like it
exactly.
Has been, right?
Yes, exactly. But overall, you know, right now you're going to be looking at probably a quarter higher in a rate, which is on average about $40 a month. So it's not the end of the world.
No,
you know, it's still very good time to buy.
Right.
Absolutely.
So I think one of the things that's kind of important for agents to remember, so if you're an agent, you're watching this and you're thinking, you know, how's this going to impact things for me working with my buyers? I know that I'm currently working with, you know, a few different buyers, and for some of them, you know, a rate change like that may not impact them so much. But I do have a couple of people that I'm working with that, you know, what we're looking for is kind of on the top end of what they're able to, you know, qualify for. And so I definitely have to come back to the lender and say, this is what we're looking at. This is the kind of house that they want. Do they still qualify for this mortgage at that higher rate?
Right.
Because you may have a letter that says that they could buy a $250,000 home
at 3.5%.
Exactly.
Or even 3.
And so you go out and you place the offer and you get into, you know, multiple offer situation. You may go up over a little bit, and you know, where they had that little bit of wiggle room before, what you may find is that once you actually get that contract back to the lender, they may not be able to close the loan.
Right.
And I can tell you, as a heavy listing agent, it's my worst nightmare.
Yeah.
It's all of our worst nightmare. And so you definitely want to just make sure that you are prepared as a buyer's agent, you know, with these changes as they come along.
Yeah. Check with your lender and make sure they're not approved at the top of their price.
That's when you really have to keep checking back, which, listen,
we do.
You're going to have to keep checking back based on the house anyway, because you're talking about different tax rates, you know, different insurance rates, things like that can always impact, you know, a specific person's ability to have a mortgage and buy a home. So, you know, I know that I'm coming back for the people who are really just kind of flirting with the edge of it. I'm usually sending homes and saying, okay, what does it look like at this? Are we still okay? Because what I don't ever want to do is, and what Erin does not want to do, is our worst nightmare.
Yes.
We do not want to get someone, you know, under contract on a home that they're in love with, and then there are problems and they can't have it. Unfortunately, it's commonplace in the market. There are a lot of lenders that don't pre-qual properly. That's why I said it's important to work with a local lender that you know is going to close a loan.
And has a local appraiser pool.
Oh my
That's really important.
Y'all, it's everything. Don't apologize. I mean, we could do separate videos about so many of these things, but it is incredibly important on so many levels. And you know, I know that whenever I first started, it was difficult for me, because I feel like people thought I was trying to sell them on my person, like it just, like I got some sort of other benefit out of it. But the truth is that the benefit that I get is I get peace of mind. I know that I can turn this contract over to her and we are going to get there. You know,
we don't even have to talk in the middle.
Like I'm going to do my part, and we're going to get through the inspection stuff, and then she's going to do her part, and then the appraisal is going to come around, and you know, we're going to get the best possible outcome because that appraiser is going to be local. Being able to tell a listing agent that whenever I have a buyer and we are placing an offer on a property, it's huge. Yeah. It can truly mean, sometimes it's not always money that it comes down to. You know, I was in a lot of multiple offer situations on my listings over the last year. And I can tell you that we could sit and look at 15 offers in a spreadsheet. Yeah. And a lot of the time it didn't come down to, of course you're looking at bottom line, right? But there are choices that are made between offers that it's based on all sorts of other terms. And lender is a big deal.
Well, I think peace of mind doesn't have a price.
No. And you know, we're sitting there looking at a bunch of offers and my clients are like, wow, these all look really close. What would you do? And I always explain risk.
Yes.
We're weighing out risk at that point. And it comes down to what that looks like. You know, what my gut tells me is going to be the easiest process to get us there. Because what you don't want is to have to go back out on the market. And so, anyway, all that to say that's why I, you know, try to get my clients to work with a preferred lender because it's just so incredibly important to the process. Anyway,
back on track.
Yeah.
In a nutshell, yes, anticipate you're going to be hearing a little bit higher of a rate. You know, the low threes, they are gone, way gone. But you should still be in the mid to high threes for now. But anticipate, you know, the low fours very shortly, but that doesn't mean the house is no longer affordable.
Right.
So.
Well, and I think that the knee-jerk response right now in this market is for someone to say, you know, it's really hard to find what I want because the inventory is so low, and interest rates are rising. Maybe this doesn't feel like the right time to purchase. And all I want to say is that this may be the lowest price that you're going to find that home at. And I've been through, you know, some roller coaster rides in the market. And so it was my initial gut response at the beginning of all of this, when everything started really picking up. My gut response based on my own experience was to say, you know, maybe this isn't the right time for certain people to do certain things based upon the way the market is. Maybe we should wait it out because, it is a concern for me to make sure that my people are making smart investments. But there are a lot of people moving to Texas.
Right.
And I think that is going to be the thing that continues to drive our local market. And what I would hate for you to do is put things off whenever this is the lowest cost you'll be able to get into the home that you want.
And the lowest rates too, honestly.
Yeah, because the rates are going up, and I still feel like, you know, we had such an incredible increase in value last year. It was mind-boggling for me.
Yes.
You know, I know,
shocking actually.
For sure. So like within our team, you know, we all live in the same neighborhood. I've lived here for 16 years now. And so we would regularly send listings to each other, and we were like, what world are we living in? What world are we living in? And also, why wasn't I in the place, and why didn't I buy a gazillion properties in the neighborhood a few years ago? Like, seriously, because the increase in value was so rapid and extreme that it was hard to wrap my mind around. I don't believe that it's going to continue to go up at that rate, but I do believe it's still going to continue to go up. We don't have any houses on the market in Eagle Springs, people. There's a very small handful, and most of them, they've been sitting because they're overpriced for what they are. So I would just say, you know, I don't know that it's going to get any better than it is right now. Right. So I don't know that I would make that. I don't know that I'd hold off.
I wouldn't necessarily wait for that reason.
Exactly.
If you wanted to move or needed to move, don't let the prices or the rates impede you at this point. You know, because in a few years it is going to be actually worse. Prices are going to be higher, rates are going to be higher.
Right. So if you're in a situation where it's what you need to do, I mean, I think you can just have the peace of mind of knowing that, you know, now is probably better than later.
Right.
I wouldn't feel like, you know, you're going to end up in a situation where you've done something that is detrimental, you know? So, okay. Just wanted to come on, talk about interest rates.
Happy New Year.
Yes. Talk about interest rates and how that's going to impact things. And if you have any questions, always, always, always do not hesitate to reach out to me or Erin. Yes. And we'd be happy to answer any questions that you have about your own specific situation, because everything needs to be tailor-made to you.
Her on the house, me on the money.
Yeah. And we will get you there, even in this crazy market.
Yes.
So hope you guys are having a great new year. And as always, it's wonderful to get on and try to share some information. We're going to continue to do this on a regular basis.
All right.
Thank you.
Have a great day.
Bye.